Welcome everyone online and here in person. My name is Ting Zhang from Crayfish, and welcome to today's UK-China healthcare event. I will start just welcoming everyone. We are seeing more people coming online, and today the event has been made possible thanks to our partners King & Wood Mallesons and Evershed Sunderland here in the venue of their Cambridge office. So we have 2 hours to total today. And the first panel is online when we have speakers all joining remotely. And that will be an hour. And then we will have the in-person panel here from 11 o'clock. So the event runs from 10 to 12. And after that will be the networking time. And for the remote audience, you're very welcome to stay for the second panel. Thanks to the good tech condition of the room, you are able also to see us speaking here, as well as put questions through the chats. So for the first panel, we will have 3 speakers. Then after that, we will take questions. So that is for the online part. As we also have people attending here, just from the host today, there's no fire drill. So if there is a fire alarm, then that's for real. Then we need to follow the signs, the exit, and we will then go outside from there. So without further ado, I will pass on to our first speaker, Rija, who's from the UK Department of for Business and Trade. She is speaking from Beijing. So Rija, I will pass it to you to introduce yourself and also to start the presentation.
Thank you, Ting. Let me share my screen. Okay. So, can you see my screen?
Yes.
Okay, thank you. Good. Hello, everyone. I am Rija Zhang from UK DBT China team. I'm very happy to join this event today and introduce why invest in UK life sciences and why China. Firstly, who we are. We are a government body, the UK Department for Business and Trade. Our responsibility is to support and promote collaboration between UK and the foreign countries in different sectors. We secure investment from UK and especially international business, and we also help UK companies to export to global markets. We China team have staffs in 6 posts, including Beijing, Shanghai, Guangzhou, Wuhan, Chongqing, and Hong Kong. I'm based in Chongqing. UK government position on China is to engage. We try our best to build up a positive trade and investment relationship. So what can we help? On trade side, we help UK companies to export their assets and service to China market. Some UK SMEs have concerns about market entry, so we can help them understand the market policy, regulation, barriers, and patent protection. So on investment side, we help Chinese investors set up the presence in the UK and support their expansion in the UK. We also help UK SMEs seek funding from Chinese investors. This part I speak in Chinese to introduce why invest in UK life sciences, and I'll introduce why China in English afterwards. 那么这一块我就用中文开始讲一下，考虑到有一些中国的企业就用中文了。那么整个来介绍在英国的生命科学这个行业的投资，如果要详细的讲，我至少需要1个小时，现在时间不够，所以我给大家介绍一下概览性的东西。那么英国作为一个老牌的一个强国的话，它对吸引外商投资，主要是体现在研发、营商环境、辐射全球以及英国政府对于 企业的一些帮助，包括我们 DBT 的一些support。那么，经过几百年的一个发展，那么英国在这个科技这一个行业得到了一个长足的进步。那么在我们生命科学这一个领域，英国它是全球的第3大生命科学中心。前面2位的话，应该就是我们的旧金山和波士顿，大家所熟悉的。跟我们生命科学相关的诺贝尔奖获得者，英国是有80多位，是全球第2，而且英国的高校也挺多。英国也是欧洲最大的生命科学产业集群。那么经过深厚的一个历史积淀，英国拥有很多世界有名的发现和发明，比如说布洛芬、青霉素、DNA 双螺旋结构、克隆羊、试管婴儿，还有 Moorfields and Royal Marsden 这样子世界一流的医院。在整个生命科学这个行业里面的话 ，MedTech 和 Biopharma 是最大的2个板块。MedTech 这一个板块的话，它从业人数已经超过了1半，而且它每年的那个产出的话，大概都在280亿英镑左右。我没有拿到最新的数据，大家可以看一下2021年的，按照我们的营业额的百分比来分，我们主要的一些 subsector 就是这么子来分的。对于生物医药行业来说，我们2021年它的产值是达到了408亿英镑。那么小分子药肯定是一枝独秀的，紧接着是我们的生物制剂、疫苗、精准医学，还有那个合同制造组织，也就是我们所谓的 CRO and CDMO。那大家都知道，英国的基础研究是很强的。那么在这么一个基础研究的情况下，英国把它往后面发展，也就是有强大的一个临床转化的能力，还有一个商业化的能力。在整个这个产业链的过程当中，英国政府以及联合了一些其他的一些力量，来助力我们整个这个产业生态环境的一个增长。那么对于英国企业英国公司就是对于我们这个生命科学整个行业来讲，市场准入是一个重点，也是一个难点。不管是对于全球哪一个国家来讲，那么英国政府的药监局的话，简称是 MHRA，它跟我们的美国的 FDA。欧盟的 EMA 还有日本的 PDMA，我们中国的那个 NMPA 药监局是一样的，他们是负责这些治疗的药物和器械的一个准入以及监督。那么对于一些创新型的疗法的话，MHRA 也有很多的快速通道，叫 Fast Track。同时，MHRA 呢，它也跟其他的一些部门进行合作，来完善它的审批的一个流程。比如说，它跟 NICE 下面的 HTA 合作，还有英国标准协会 BSI 进行合作。HTA 的话，这2年可能中国的我们的一些行业人士就比较知道 HTA，因为我们的医保局它在进行医保谈判还有集采的时候，它会采用一些 HTA 的一些方式。那么我们部门就是 China Team，我们促进了 MHRA 跟中国的 NMPA 之间的一个合作，他们签了合作备忘录。那么 MHRA 它会把它在那些先进疗法上面审批的一些经验分享给中国的 NMPA。我们拿到了 MHRA 的一个 license 之后呢，我们肯定是想在英国卖产品。那么主要有我右手边这5个就是主要的一个通道。那么英国它90%以上的医院都是公立医院，那它的一个采购的话，类似于我们中国的集采。跟我们的中国的集采差不多，所以我们是建议公司在英国的话是要设立一个 entity， 那么以这个 entity 为主来作为我们的 MA holder， 然后有强大的一个供应链在那里，那样的话会更容易进入英国的一个供应链。那么英国的营商环境从机器的这个国家来看的话，是仅次于美国的。然后劳动力成本它在整个西欧是很具有那个影响力的。那么比如说它是低于意大利、爱尔兰、法国和德国，它主要的原因还是它的雇主的社会成本缴纳的比较低。另外就是人力资源的一个供给还是比较充足的，就是在生命科学这个行业，全球排名前10的大学里面的话，有4所是在英国的，而且质量也很高。这几年英国也跟其他国家一样，开辟了一些自由贸易港。如果说我们是要在英国的产品是最后要卖到欧洲其他的国家的话，我们是建议在自由贸易港设点， 比如说利物浦的那个生命科学的那个产业园区，它的那些 facility 都是十分的完善的。那么英国政府对于创新是很看重的，其中一个就体现在税收优惠上面，一个是研发税收减免，一个是专利税。那么这两块是最大的两块体现的我们的税收优惠。那么如果我们是想在英国设立一个研发中心的话，那这个研发中心延伸出来申请的专利最后产生的我们的销售的话，我们的企业税最多可以降到10%。把这一条规则运用的极致的，就是我们大家所熟悉的那个中国的迈锐。英国政府对于企业的话支持也是很大的。它会通过 UKRI、Innovate UK 还有其他的一些 charity 来对公司进行那个资助。那比如说大学 spin out 出来的一些公司，还有一些小型的公司，他们会去申请 UKRI and Innovate UK 他们的一些资金。英国呢，它是全球的一个金融中心。伦敦证券交易所呢，也是世界上历史最悠久的交易所，在这几百年进行了一个很好的一个沉淀。那么它2021年的一个交易量也达到了3.29万亿。那么它为这些科技产业提供了很好的一个融资的途径。英国它是欧洲最发达的一个 VC 市场。那么去年2023年，我们英国 Biotech 它的融资的话，去年融了大概是18亿英镑左右。那么比起2021年，它降低了不少。但是在整个全球的一个环境情况下，它表现还是很不错的。也就是说，英国的 Biotech 它的一个吸引力还是很强的。那么我们对于外商投资来讲，我们进入英国市场肯定是要辐射全球的特别是欧美这些发达国家。同时，我们也可以来辐射我们这个英联邦市场。英联邦市场的话，一共有56个成员国，它有25万亿公民，这个对于中国公司来讲还是很大的一个市场的。我们前2年经常会说 "In China for China"， 特别是阿斯利康，他很喜欢这样子说。那么我们也希望对于外商投资人来讲，我们是 "In the UK for the globe"。然后我想给大家介绍的就是一个东方精英，这个 case 的话还是挺典型的。他们把英国当成了他们辐射整个欧洲的一个桥头堡。然后东方精英选择英国呢，主要是它有友好的一个营商环境，还有是政府的支持。东方精英在英国的这一整条路线的话，也是我们团队支持的。我们团队提供的服务都是免费的，因为我们也代表英国政府，主要是促进两国的一个交流。那么我们可以从整体上给大家一些建议，帮助大家去进入英国去投资。然后如果涉及到最细的一些东西，比如说你要开设一些账户，你要做 due diligence 这一些的话，我们是希望会把你们推荐给我们的一些合作伙伴，比如 Crayfish 呀、金度这样的公司。Okay, I want to introduce Why China to you now. So the Chinese government is promoting the development of the life science industry. So let's take the biopharma and the medtech sectors, for example. China has initiated a comprehensive reform of its drug registration system, aiming to streamline and the approval process, reduce administrative burden, and accelerate the market access for innovative drugs. So this includes implementing a priority review system for breakthrough therapies, fast track application pathway, and the registration pilot zone in Heilongguang, Lecheng, and the Great Bay Area. In addition, China is also aligning with international standards to facilitate the registration and approval of innovative medicines and devices, such as the ICH and the mutual recognition agreements with several countries and regions. The government is also providing financial incentives to promote life science sector. There are also other support to facilitate the business collaboration, including supportive policies on Belt and Road Initiative, free trade loan, and patent protection and etc. So, and there are four most popular areas for life science industry in China, which our team has been building very strong connection, which with over the years. So about the capital, the Chinese government, okay, sorry, the capital, okay. So after a decade of rapid growth, the China's biopharma innovation capital market is in reset mode. So PE and VC investment in biopharma sector are cooling down, aligning with the international trend. So this requires more tailored service to help UK SMEs to identify potential investors via business matchmaking, one-to-one meetings, and different events. So here are some finished equity investments by Chinese investors that we have supported. So CIC is one of the world's largest sovereign wealth funds. CIC set up a fund with Charterhouse and acquired Foster and Cleligin. So now both Foster and Cleligin have entered the China market. Foremost is a UK biotech completed the Series B investment round, which was led by BGF, followed by XTRA. So Tencent, as you know, is a Chinese tech giant and has a big investment team in the UK. And Barringsworth closed the Series B financing round, which was led by Gilead and Tencent. So we are working with strategic and financial investors to invest into the UK life science industry. Some key players including Qingming, Fusan Health Capital, H3 Bios, and more. So they are actively looking for overseas investors, and UK is one of their destinations. Okay, this is licensing. There is significant change on cross-border deals last year. So the increased out-licensing and decreased in-licensing deals in China showcased the significant development in China pharmaceutical innovation capability and demonstrated the impact of the policy reform. So however, there is still a strong potential for international cutting-edge technology, and the front payment is still significant. We also want to share with you the top 5 Chinese licenses last year, including Huadong Medicine, Jazz Pharmaceutical, Sincere Pharmaceutical, Beta Pharma, and Huston Pharma. So we work all of them. So what is Chinese biopharma looking for? After 1 year of post-COVID reopening, China's biopharma industry has been showing signs of rebounding primary demand and warming up of investment and financing activities. So there are 4 areas that the Chinese biopharma are looking for. So based on our previous experience, the innovative therapeutics, advanced technologies, global expansion, and strategic collaboration. So now I want to give you 2 case studies. First one is about trade. There are a wealth-based SME who specialize in rare disease pharmaceutical assets. So they engaged our team and participated in our market access events. So we provided advice on market access and business culture in China. They joined the China Bio 2020, supported by our team. We arranged multiple tailored business matchmaking meetings for them with Chinese companies. So where Citron was one of the Chinese company. The second one is about the investment. It's about the investment of Pharmaron. Pharmaron is a large Chinese CRO. They have several presence in the UK. Crampton, Liverpool, Rushden, Hoddesdon, and Cardiff. Pharmaron acquired Allergan Biologics individual from Abbey, BBVA. They have R&D and small to medium-sized some manufacturing facilities in different sites. So we supported farmers on their site selection in the UK, facilitated their relationships with local authorities, and introduced the key contacts in the UK to support their business operation. So we provide continued support to them, such as helping apply for government grants for expansion, one-to-one meetings with high levels of DBT. We have extensive network in China and the UK HM government to support your business with Chinese partners. In China, we have interactions with Chinese regulatory authorities. We have close relationship with majorities of Chinese life science companies. We also know the big names of CROs, distributors, law firms, consulting firms, and incubators. We also have partners in Beijing Embassy, such as the IP office, the TPU, the Trade Policy Unit, and Science and Innovation, and UKRI. Okay, so we host different events to build up the connection between UK and China. So welcome to join us. So these events are pharma related. So if you have interest in the events of other sectors, I'm happy to direct you to my teammates. We have a UK-China Business Connect platform. So for UK companies, you can scan the first QR code to register, and for Chinese companies, you can scan the second QR code. And the last QR code is my venture account. So I studied chemical engineering and used to work in a large pharmaceutical company. I have been working in life science industry for more than 10 years. So happy to get connected. Thank you. Tim, back to you.
Thank you very much, Rija, for giving us so much information and what DBT can help and how the companies can explore the opportunity between the UK in such a short period. I understand that there's a lot more details available, so people can always contact you later with your details for more support. And you mentioned particularly the matchmaking for Chinese PE and VCs investors with the UK SME in healthcare. That's very much the trend now for UK businesses to get into China. So that's also why we have invited the next speaker, Eric Chen, who represents the PE and VC side, to talk about what the Chinese investors actually looking for when they come to look at the pipeline and invest into the UK market. So now I would like to invite Eric Chen from Haoyue Capital to talk to us about this, his views, and also generally the Chinese investment in healthcare into the UK. Eric, over to you.
Yeah, sure. Thanks. Yeah, is my slides working well?
Yes.
Okay, great. Thanks the team and the organizer for inviting us. I'm Eric from Haoyue Capital. We are a boutique healthcare investment bank based in Shanghai. We founded 10 years ago. We primarily help our clients, Chinese startup companies, to raise capitals from VCs, PEs, and some strategic investors. For the past 10 years, we have we closed over 300 transactions. We might be the largest boutique investment bank in China, focused on healthcare. So today I'm going to share some of our thoughts about what Asian and Chinese investors for PEs interested in UK market. So I have 3 to 4 slides to share. You're gonna be concise. So we put some data about the healthcare transactions in UK for the past 2 years. There are more or less 100 and 150 transactions per year in UK. Meanwhile, in last year, 2023, there are 900 transactions in China, which is 9 times. I think that there are quite a difference. And among the in this small circle, this is the number of transactions involved Chinese investors. So our conclusion is, our observation is that Chinese investor has limited presence in UK healthcare investments. And the data might not be comprehensive, but I think overall the penetration might be less than 10%. And luckily we got all these 10 transactions information. For example, 2023, we got 4 transactions and 6 transactions in 2022. We have some observations. For example, in terms of the stage, Chinese investors primarily invest Series A and Series B, those early stage companies. And they do more follow-up invest than lead invest. In terms of category, you can see at the last column, they invest primarily in biotech companies. As Reija mentioned before, UK has very strong R&D capability, and there are lots of research institutes and universities. I think their assets, this biotech's assets, comes from those institutes. There are 2 merger and acquisition transactions. One is, which I mentioned before, the Pharmaron. They acquired 1 company 2 years ago. So for the merger and acquisition transaction, the buyer all listed companies in China. Later, I will share what's their rationale to buy companies in the UK. So from the last 2 slides, our conclusion is that there are lots of rooms for Chinese investors to know more about the UK markets. We talked to some VC investors and PE investors and some strategic investors in China last week about how they think of investment in UK. So this slides. There are lots of information I'm going to share. For VC investors, for all these investors, not all of them can invest UK companies. There are some qualifications for them. For example, they must be funded by global funds, because investing USD, most of the UK companies receive USD funds, and these investment teams must be actively investment, because for the past 2 years, the IPO of China market is very, very slow and limited. There are over 500 to 600 companies waiting to be approved for IPO in China market. So they face a lot of exit challenges for these investors. So not many investors are actively invest right now in China. They just observe and wait for a better time to invest. And lastly, they must have a very experienced investment team to invest foreign deals. The culture, the language barrier. So that's why the 3 reasons might limited Chinese investor invest in UK. In terms of investment area, VC investors and PE investors are quite similar. They primarily invest in product company, not business model innovation companies, because it's easier to assess, and they have a lot of paper to read on from in China. if it's a business model innovation company, they have difficulties to do diligence. And VCs and PE investors have a different preference. We talk to VC investors. There are four preference. The first one, they hope to see a Chinese founding team member in the management team. Second, the company might need have a China story, how to get build up a business in China. And VC investors primarily do follow-up investments in UK. It's easier for them. And now they are trying to get some connections with universities in UK. They are interested in incubation from university, early stage incubation from universities. And their rationale to invest UK, there are three reasons. The first one, they believe that UK still has some first-in-class innovation. They invest a lot of startup companies in China, but they are me better companies in general. So as a VC investors, they are more interested in real innovation. And the UK market, the valuation is more fair for this VC investors. In 2021, the valuation of private companies in China, especially biotech, is just go crazy, and they think they cannot make arbitrages when they IPO'd at this valuation. And the VC investors, the last one is more exit options when they invest in UK startup companies, because merger and acquisition is a very important exit option for VC investors. But M&A in China right now is quite difficult, partly because of the high valuation. Not many strategic buyers can afford that valuation. And for PE investors, we think there are less qualified investors than VCs, because many global PEs has UK division. For example, the Warburg Pincus, the Goldman Sachs, they have UK investment arm. So the PE investors in China does not have a very strong angle to invest. Their qualifications and investment areas are similar to VC. Their preference is typical VC PE preference. The company must have positive EBITDA or profitable. They must have a China story, and a reasonable valuation. So the rationale to invest is market arbitrage, because once an asset or a company can go IPO in China, the PE ratio might be higher than other major stock markets. And another rationale is once they bought the company or control the company, they can have a China market-driven growth. Then they sell the assets to others or get the company get IPO'd. Today, I'm more interested is strategic investors. For the past 2 years, Taoyue has covered over 200 listed healthcare companies, and they have some demand of foreign investments and more actively right now. The qualifications for strategic investors are they must have some of the global business. They must have some sufficient cash balance in their balance sheet. Most importantly, they need to have a globalized management team, because acquire or merge a foreign company is difficult, and not many company has the capability to do post investment management. So in terms of the investment area, they are interested in all area based on what their core business is. They have preference similar to PE, positive EBITDA or profitable at least, and they must have a China story, whether the product or the service can be operated in China, and they need a reasonable valuation, of course, and even licensing. Rija just mentioned there are lots of licensing transactions in the past 2 years. So those strategic investors are interested in this. And last preference is synergy, top line or bottom line. The rationale to invest UK company because they face a lot of challenges in China. The competition is very fierce in China, and in terms of policy, there is volume-based procurement. So many listed companies, their growth has slowed down a lot. Slowed down because of the VBP policy, and they have limited choices because the valuation of those private company are too high. So they might interest in the UK companies with reasonable valuation. So these are the examples of VC investors who still actively invest in foreign countries. Qiming, Rija just mentioned before, and Life, Lee Asia Venture, and Metrics Partner in China. These are just some of the examples. For PE investors, Boyu is very active, and Hill House and CPE. On the right side, well, we talk to many strategic investors. They are very hard trying to grow by globalization. The rationale is that, as you can see, this area is the top 10 healthcare companies in China in terms of the market cap. The first one Rija just mentioned is Mindray. It's a medtech company, and the red dot means they have global business. So out of the top 10 Chinese healthcare companies, only 3 of them have a global business, and their market cap combined is only 1/3 of the Eli Lilly. So those company thinks we are in the second largest healthcare market in the world, but the valuation and the revenue scale is not equivalent to the market. So they're trying very hard to go abroad. So acquiring foreign assets, reasonable price, I think that's very important for them. So a little bit about Haoyue. We founded 10 years ago, and we're based in Shanghai. We have 4 offices. We have our USD and RMB fund in 3 years ago. We not only do investment banking, but also we invest. We have a private placement, the M&A, and spin-off business advisory services to our clients. We invest biotechs, medtechs, and then we have some professional services to those startup companies, founders, and HRM consulting. Yeah, these are some numbers of our past 10 years results of 300 transactions completed and 50 merger and acquisitions. Yeah, these are some of our transactions completed. We cooperate with the top tier VCs and PEs in China. Yeah, I'll leave some time to discuss with our audience that's more interested. Yeah.
Thank you.
Yeah, that's
Eric.
it.
Okay.
Yeah.
Thanks very much, Eric, for the presentation, which is very informative. And I'm sure we will have questions when we finish the presentations.
Yeah.
Particularly on those transactions, a very, very interesting trend to see as well. So I think one of the things I pick up is that there's a drop of investment in 2023 from 2022. Yes, that one from the Chinese to the UK. I wonder whether that's anything to do with the new UK National Security and Investment Bill. And therefore, very timely, we have the next speaker, Claire Morgan from Evershed Sutherland, who specialize on trade and foreign investment, who will come and speak to us about this important topic. So Eric, we will take questions later. So if you could stop share, and then we will have Claire to come and talk to us about the NSI and the implications.
Thanks very much. I'll just share my screen. Okay, hi all. Thanks very much for having me. As Ting says, my name is Claire Morgan. I'm a partner in the competition, trade and foreign investment team in Evershed Sutherland. I'm based in London. And so I'll give you a kind of high-level overview of the National Security and Investment Act and comment on its application in the healthcare sector in the UK. So
make it into a full screen if possible.
Oh,
yeah, because then that would give us probably better.
Is that it's full screen on mine?
Okay.
Not on
Don't
yours.
worry, otherwise.
Let me just try it again. I'll retry. Obviously, it always works whenever you're when you practice, but then doesn't work at the.
That's fine. Don't worry. Yeah.
Okay. Okay. So the Act came into effect in January 2022, and effectively it introduced the UK's new foreign screening regime. And I think it's fair to say that, you know, that's just part of the global trend. We're seeing new and expanded foreign investment screening regimes globally. So in the EU, for example, I think nearly all EU member states now have their own regime as well. But as I'll get on to, the approach of the UK has been slightly different from the EU member states in terms of how it defines these sensitive sectors. So essentially, this regime applies. It's a mandatory notification regime, and that applies where an acquirer or an investor moves from below to above certain equity or voting right thresholds, and that's below to above 25, 50, and 75%. And that's in a UK target, where that target is active in one of 17 critical sectors. And before I get on to the sectors, it's just to note, this is a broad regime. It's applying to a lot of deals in the UK. And that's because it's agnostic to the nationality of the acquiring business. So we are making a lot of notifications by UK companies of UK companies, which is somewhat unusual in terms of how globally jurisdictions have approached this. There's also no deal size threshold. So this is catching very small deals and investments into very small target businesses. But the focus is on the activities of the target business and whether they fit one of the definitions. And so if it's triggered, there's a mandatory notification, which is made via an online portal, and that goes to the UK's new investment security unit that sits as part of the Cabinet Office. And you have to wait until clearance in order to complete the investment. And there are significant penalties for failure to file. Those penalties sit on the buy side or the investor side. But importantly, if a notifiable acquisition or investment isn't notified, it's automatically void. So from a buy and sell side, it's important to get this right. So these are the 17 sectors that the government has identified as being critical to national security. Some of them are defined over pages and pages of legislation. So for example, advanced material being 9-10 pages long. Of particular relevance to healthcare deals, we find obviously synthetic biology. But there are other definitions here which apply across industries. So critical supply to government, AI, data infrastructure. So if you're looking at a biotech deal, for example, a lot depends on who your contracts are with and what kind of technology is involved. So just to note that you can trigger multiple definitions on any given deal. Synthetic biology is an interesting one. So you'll note that there's no broad category here for public health.
Oh,
or
sorry,
life.
Claire, can I interrupt you? I
Sure.
think we have a problem with the slides, so maybe we were sharing it.
Okay.
Yeah, I think, yeah, let's do that.
Let her unshare first.
Yeah, if you could unshare it, and
Sorry, yeah.
I will do that from my end, because I think I realized that it was not moving.
Okay.
Yeah, let's do that from my end. And sorry for that. Let me just try that. It's okay. We have time to go back if we need to. Let's see. Yeah, it's not.
Thank you.
So shall we just move to the
It's the
next?
slide with the blue boxes on it, the third slide.
So let's just yeah. Yeah, this one. Shall
Yeah,
we just
perfect.
yeah. And if
Thank
you just say
you.
next, and I will do that.
Sure.
Yeah.
Okay, so these are the 17 sectors, and I was just getting on to synthetic biology, which you see in the middle. So there isn't a broad definition here for healthcare or life sciences, for example, and that was actually proposed whenever the bill was coming in, and there was the definition would have covered a lot more life sciences business and healthcare businesses. There's quite a lot of pushback at that point, and what we've ended up with is actually quite a narrow definition for synthetic biology. And that is defined in the regulations as the process of applying engineering principles to biology to design, redesign, or make biological components or systems. And it covers a broad range of activities relating to that, including kind of carrying out basic scientific research, being involved in the development of synthetic biology, producing goods using synthetic biology, and providing services which enable those activities. However, if you go on to the next slide, please, what you'll see is the kind of reduction in that definition means that there have been relatively few synthetic biology notifications made. So this chart shows in the in the Investment Security Unit's last reporting period, which was to March 2023, no surprise that the most notifications that were received by the ISU were in defence, critical supply to government. And you can see near the bottom there, synthetic biology accounted than 5% of all notifications. So perhaps that kind of narrowing of the definition has helped reduce the number of, or reduce the onus on the healthcare sector in terms of notifying these types of deals. But if we move on to the next slide. So that is the mandatory regime, as in where if your target business is active in that sector, then you have to notify the government. What sits next to that regime is the ability for the government to call in for review transactions which fall outside the mandatory regime. And that is where the transaction, in their view, has given or may give rise to a risk to national security. And that is much broader. This entire regime is much broader than the mandatory notification. So it can include the acquisition of material influence over a target business, and that can be shares as low as 15%, even lower. It's a kind of vague concept, but in the round is about the acquirer or the investor being able to materially influence the policy of the target business. And also crucially, and especially in the higher education space, is that the UK government has the ability to look at acquisition of control over assets. And that includes the transfer of IP. And I've included some examples of the types of IP that would be relevant. And indeed, the UK government has blocked the transfer of IP between a university and a private entity previously. So just something to be aware of is it's not just an issue that arises in an M&A context, but also has broader repercussions, especially in higher education. The ISU is able to call in transactions or transfers within 6 months of becoming aware of the transaction, as long as it's within 5 years of that transfer. And another kind of procedural point is to note that if the ISU were to call in a transaction, they can impose a hold separate order, essentially freezing the position, the status quo, pending the outcome of their decision. So if you move on to the next slide, please.
Claire, sorry, just one question. When you say transfer of IP, does that also include technology? It doesn't mean you actually mean the transfer of the ownership of the IP. You mean any transfer of any technology, like a technology license. Is that what you mean?
Yes. So they use the term acquisition of control, but that would include a license transfer, yes.
Thank you.
Okay, next slide. So potentially, given that broader voluntary regime can apply specifically in a higher education context, you can see here the breakdown of the voluntary notifications that have been made to the UK government. And you can see on the left that we've got academic research and development in higher education accounts for fourth largest number of notifications. There's also professional, scientific and technical activities as well have received a number of notifications. So essentially, we're finding a lot of clients are, if you are in and around one of the definitions and there is a question over whether you meet the definition, or in the kind of transfer of IP scenario, clients are choosing to notify the ISU with a view to obtaining security and certainty around that transaction or that transfer. And interesting that 21% of all notifications were voluntary. I think that was slightly higher than we had anticipated. Query whether that is because some of the definitions are quite broad or complex, or arguably in some cases not brilliantly drafted. So there is a degree of confusion as to whether a target falls within that sector or not. The next slide, please. So in terms of our experience over the first 2 years, the good news is that if investment does fall within the process, in the vast majority of cases, we're finding the process very easy to deal with. So the initial review period is 30 working days, and usually it is a matter of getting the notification in, letting that time period run, and there's very minimal contact with the investment security unit. So by and large, goes very smoothly. We have had some experiences of more difficult cases, and they can be much more tricky to predict. And we have had cases where we've been in the process for kind of 6 months. And that reflects the ability of the ISU to stop the clock with questionnaires to parties to the transaction and third parties. So the timelines can become very unpredictable in that case. In terms of engagement with the ISU, you can have administrative meetings with them throughout, but as you might expect, they give very limited feedback if they do run into concerns as to what their concerns are. There's no definition of national security for national security reasons, essentially. I think the overarching point to make is that a very, very few transactions are actually being prohibited. So less than 1% of all notifications prohibited in the last reporting period. None of those were in the healthcare space. And I think the UK government has certainly shown a willingness in those more difficult cases to negotiate remedies. So things like information barriers, agreeing to keep assets in the UK, for example, rather than prohibiting a transaction outright. So that's it in terms of the impact on the healthcare sector. I think would probably be, happy to confirm that it doesn't appear to have had a massive impact on the transactions that are going through the process at the moment. And that narrowing of the synthetic biology definition, I think has certainly made a difference as well. Happy to take any questions.
Okay, thank you very much, Claire. So again, that is all very, very useful because I think these are still relatively new. to many of us here, particularly in healthcare. It's, you know, people think, yes, defense, you know, and AI, that's very obvious. But for healthcare, for, you know, biotech, it's quite, you know, sort of, you have to drill down those. So it'll be very interesting to know. So I would now open the questions and invite people to ask. So I know that previously Rija had to leave from DB, but now she's rejoined. So for people who are online, please put the question into the chat, and then I will read out. And for people who are in the room, please just raise your hand, and I will watch, and then we will take questions. So perhaps I could ask the first question while people are still preparing a question. This would be for Eric. So Eric, I would like to understand that is the strategic investment, this trend for you to see from Chinese investors, because you mentioned there's a number of different ways of investment. Is that what you see? And do you see that coming to be more this year or takes longer?
I think, yeah, for the past 2 years, we talk a lot of strategic investors with their founders, with their investors, and even their M&A team. They are actively seeking opportunities to grow by acquire companies in relates to their core business, because the competition in China right now is very, very fierce. So going abroad, be globalized is their next growth engine for most of the companies, especially for the big companies, maybe top 50 or top 30 listed companies in China, because the product price in foreign countries are much higher than the domestic China market. And the payment system in UK and US, you guys have insurance company cover a private insurance and the national insurance, both. But the private insurance in China is very, very early stage. So majority of the payers in China are the nation. So the price is very, very low. So what they are trying to do is go abroad and sell products in higher prices. And to your question, yes, they are actively right now to seek M&A assets globally. Yeah, it's happening right now.
Great. I think that's really good news for many of us sitting here, but also joining remotely. So I would know, anyone want to ask question? Any of the speakers, Rija, Eric, and Claire? I have nothing online at the moment. So if anyone in the room wants to ask question, please ask directly.
So maybe for Claire, so do you think that this the new regulations about national security in relation to healthcare, are you normally able to have a very good judgment as to whether it will affect in any way? You know, is it, because I can understand like defense or something is more complicated, but I guess with this one it would be more about data and things like that. And is it also easy to judge at what level? I noticed you said below 25%, but you said also it could be 15%. Just like if there is an investor looking at it, should they look at this before they even plan an M&A deal? Is it something you can get a relatively good feeling for before you go to all the trouble of starting negotiations?
A very good question. So in terms of determining whether you fall within the definition, is that the question about synthetic biology, is whether you trigger? It usually is a matter of Q&A and kind of getting to the bottom of exactly what the business is doing. Synthetic biology has its definitions and then it has its exceptions as well. I think it is one of the better drafted definitions, I would say, and a target business will usually very quickly know whether it falls within that definition or not. So the certainty of whether a filing is required or not, I think is pretty good with the synthetic biology definition specifically. In terms of the acquisition of the level of shareholding, so material influence, generally, it's borrowed from merger control, and it's a notoriously woolly concept. But I would say kind of above 15%, it depends on your board representation, depends on the identity of the investor as against the other investors in the company at the moment. So to give you a non-healthcare example, when Amazon invested into Deliveroo, Amazon, the Competition and Markets Authority said, well, Amazon know what they're doing. Amazon are going to be a very strong shareholder and are going to be able to guide the company in a way that potentially another investor who came in at a similar shareholding wouldn't. So it's probably not a great answer to your question, but it's a bit case by case as to what equity or voting rights would trigger. But I would just completely agree with you that it is something that should be considered beyond in any given transaction, both in terms of is a filing required, and also in terms of is this something that you could foresee raising issues, which would mean a more difficult process with the ISU, because it obviously has a major impact on timelines and execution risk on any given investment.
Thank you.
Any other questions from anyone?
Eric, question on the, just following on really from the last question. In the example you gave, the number of transactions in the UK market, and then you had your observation that generally, Chinese manufacturers, companies are looking to move into, the UK, US to grow. Is that what you're seeing in those data for those companies you listed on that slide?
Let me put out the slides. Which
Slides
are you at?
Transactions in a particular year, yeah.
Okay. Let me.
Could you just also, you could ask questions.
This one?
Yes, that's the one. Yeah. I just wanted to sort of put that overlay of that idea of, growth and how that relates to those transactions.
Mm-hmm. Oh, sorry. What is the question again?
You mentioned overall the Chinese companies were looking to grow externally.
Yeah.
And I just wanted your overview on these particular transactions, how that sort of narrative supports their behaviour on this transaction summary.
So these investors are, you can see here, they are majority of VC investors. They are seeking to exit from IPO or M&A. But these companies, they are trying to really acquiring assets, because right now I think China in general, we need more globalized management team, but not every company has it. So the fastest way or the easiest way is to buy one rather than build from scratch. So that's why they want to acquire a company in the first place. And then it's not only a profitable asset, but more importantly, the synergetic. They can use the company as a new sales channel to foreign countries. I think that's why their rationale to acquire companies rather than build from scratch.
Okay, but the previous slide on the investments, that's more about early stage technologies rather than actual. Yes. Okay. Right. So there's a difference there, isn't there? Then it's not these aren't about growth stories. It's about acquiring new early stage technologies.
No, they are not trying to acquire early stage. From our knowledge, they try to acquire mature assets. For early stage companies, they prefer to cooperate with venture capitalists to co-invest in the early stage, and then if it goes mature and fits into the core business in the future, they might acquire. later. Yeah.
In general, we have
Because of the risk. Because of the risk, I think for some of the assets they are really interested in, they prefer to licensing, rather than acquiring a non-profitable company.
Yeah, I think that's what we have seen as well from existing share investors into the UK healthcare. We see Chinese investors typically much more reverse to risk, and therefore they tend to invest much more in later stage rather than early stage. But luckily in Cambridge, particularly, we have a very good investors community for early stage investors, angels and VCs.